YouTube, this is the Efficient Trader, and today we'll be checking out or knowing what candlesticks are, types of candlesticks. So if you're completely new to the stock market, this is one of the basic things that you need to be knowing. And if you've been in the stock market for a while, then you definitely know about this. So yeah, that's it. Let's directly start the video. Okay, so why candlesticks? Alright, there is no such reason that you can only use candlesticks. I mean, आप कुछ भी यूज़ करते हो, कोई भी चार्ट यूज़ करते हो, चाहे वो ट्रेडिंग व्यू हो, चाहे आपका कोई ब्रोकर का चार्ट हो, जैसे ज़ीरोदा का चार्ट, अपस्टॉक्स का चार्ट, या investing.com पे आप कोई भी चार्ट देखो, on that you'll always see a few options like these. Okay, and you can use bars, you can use lines, you can use area, you can use anything, but the most widely worldwide used tool to read charts is a candlestick. तो अब कैंडलस्टिक्स में भी अलग अलग टाइप्स है, जैसे हाइकनाशी हो गया, या फिर रैंको. I've never used any of these, being honest with you. The max I've used is haikanashi and candles, and sometimes lines. Nothing more is needed, nothing more you need to know out of this. If you know candles, if you know them properly, it's gonna be easy for you. आप चार्ट आराम से रीड कर सकते हो अगर आप प्रॉपरली knowledge रखो candlesticks का. Okay, so the basics are done now. We'll get to the second part, that is what is a candlestick. Okay, so let's just start with this. Why am I not able to use this? Yeah, okay, let's say this, and I have not used paint in a long time, so please excuse me if the line, why isn't this line being straight, dude? Come on. Okay, doesn't matter, this is not straight line, this is a straight line. Sweet. Okay, so this, and let me just copy it out. So yeah, this and this here. In the stock market, you'll see two types of candles, two colors of candles. One is green and one is red. Now what that means is, on this day, on this specific day, the market price moved up. It was a bullish market. And whenever you see a green candle, the prices moved down. It was a bearish market. Now what you need to know is, what are these points on a candle and what is this called? So this portion right here is called as a wick or a shadow, whatever you want to call it, you can call it. This is a wick. This right here is the body of the candle. Okay, I need to be a bit fast here, but I can't because I do not have anything to write. It's just the keypad. Never mind. And this is also called as the wick, and same goes for this candle, exactly whatever is written here. Okay, so now we get back to what happened. This can be a daily time frame, it can be a 15-minute time frame, any time frame. So what does that mean? That means that whatever you see here, this one candle is being formed either of 1 day, or of 15 minutes, or of 5 minutes, 1 minute, anything. That we'll come back to that in a while. But what it is saying is that the candle, the price opened here. Okay, like it opened here, whatever price it was, this was the opening price. OPEN, yeah, open. This was the open price. Okay, this, whatever the height is, okay, the highest point is known as the high. Okay, and the lowest point that you see here on the candle, this point right here, is known as the low. Simple, right? Oh, yeah, kind of simple, no rocket science. This is just like the literal basics. And this point you see here, where the candle has ended, this point is the closing point of the day, or the 15 minute or 5 minute, whatever it is, whatever you're seeing right there. Okay, this is the close. Now you see, let's assume that on that day the price opened at 100. Okay, let's say it opened at 100, it went down till 90. Okay, obviously it will go down till somewhere. It went down till 90, it went up again, like the buyer started buying more, so the demand rose and the price also increased, and let's say it touched 120. All right, and then by the end of the day, by 3:30, the price came back down again, and it closed at 100 and oh, come on, it closed at 110. Okay, simple, nothing complicated yet, simple, right? So what you can say is the price opened at 100, the high made was 120, the low made was 90, and the closing was at 110. So the price is increased, thus it's a green candle, bullish candle. Now coming back to this, the high and the low is going to be the same, this and this is going to be exactly the same. So high, I'm not writing high full here, or I should, I don't know, yeah, never mind, I will. High, low. Okay, now as this is a रेड कैंडल, सो यू कैन अंडरस्टैंड दैट ये जो है इसका एग्जैक्ट ऑपोजिट होगा यहाँ पे. द प्राइस ओपनड हियर, ठीक है ना, मार्केट खुला तब इस प्राइस पे था, तो ये हो गया आपका ओपन, ठीक है, ये हो गया हमारा ओपन प्राइस. ओके, and whatever happened during the day, it touched high, it touched low, whatever it did first, but in the end 3:30 बजे मार्केट यहाँ आके बंद हुआ इस प्राइस पे, ठीक है. तो ये हो गई हमारी क्लोजिंग प्राइस. ओके, yeah, nothing is complicated. If you understood what the red green candle is, you can understand what the red candle is doing. Now let's just say, for example, the market opened at again 110. Let's say it opened at 110. Okay, it went high to 120. fair enough, पहले ऊपर गया 120, उसके बाद फिर पूरा नीचे गया 90 तक. Okay, it went down totally till 90, and then while the market was ending, last minute 3:30 को प्राइस थी 100. Okay, so on this day what happened was that the market was bearish, प्राइस नीचे आया 110 से प्राइस 100 पे आया. Okay, so this was a bearish market, this was a bullish market. You can see that, right? You can see it right here. Nothing is complicated in this. Okay, and this is absolutely basic. All right, let's just see on the chart. Okay, this is the chart. Now you can see here up, right, open, high, low, close, you can see everything here, right? And you get onto any candle and just see what figures are coming here. Okay, like for this candle the open was 16,128, the high was 16,140, the low was 15,950, and the closing price was 15,966. You see the closing and the high and the opening, these two, you see the difference. So this was a red candle. Same goes if you see a green candle right here. The opening here was the opening right here. Wait a minute, this was where it opened and this was where it closed. This was its high, this was its low. Simple. Okay, you understand, right? I mean, if it's a red candle, the price has gone down. If it's a green candle, the price has gone up. Nothing complicated. इसमें तो मतलब कुछ इतना है नहीं. अगर आपको ये समझ आया तो आपको आगे का समझ आ जाएगा. Okay, now let's get back to the types of candlesticks. I mean, if you see here, all candlesticks are not the same, right? Some have a big body, some have a big wick, like this has a big body and small wicks, but this has a bigger wick, this has a big wick, this has a big wick, and this has such a small body, like this candle is such a small body. So depending on all of that, like the body and the wick, the size of it, the candlesticks are divided into a few types, and those types can help you understand what the market might do or could do. It's never like the market is going to do the same or is going to follow the same things, but mostly it does. Okay, so now comes the first candle, the first type of candle that we're going to learn about today, and that is the hammer. Okay, this the hammer. All right, now what is a hammer? Literally what you're thinking right now, the hammer is just that. All right, this and this. Now mostly the color of the hammer does not matter much. What matters is where the hammer is formed. Okay, well, let me just do this here. Where the hammer is formed, that matters more than the color of the hammer. Okay, and I'll show you guys. Just yeah. Now this is the hammer. Let's say that the price was like this is the hammer, and I'll have to name this too, and just name this is the hanging man. Why is it writing it in green? Okay, never mind, no problem. So if the price has been, let's make it color. If the price has been falling and you see something like this being made, let it be green, let it be red, it does not matter. Okay, and the chances of price rising after this is, whoa, the chances of the price rising after this is high. All right, now what does a hammer signify? Right, it signifies that the market opened here. Okay, it opened at this price, right? It went down. The bears, the people who were selling, took it down till here, right? This was the low made, but during the market hours, the people, the buyers, had so much pressure that they got the price back and they got the price up, and it closed here, right? Close. So it signifies the strength in buyers. So if it is like the price is falling, you see something like this, the chances of the stock or the index going up is high. Now on the other side, let's just come here. If the price, let's say, is rising, all right, the price is rising continuously, it's a bull market, and you see something of this sort. Okay, again I'm saying that the color here does not matter, it can be anything. Even this can be red and this can be green, but mostly we associate green with buy side and red with sell side. That's why I'm doing this, but literally this can be red and this can be green too, it's fine. The thing that you need to know is where they're being formed, right? So after this, if after this, like this was a price coming up, this was formed here, the chances of the market going downwards is high. So these are the two types of hammers. I mean, even this is a hammer, even this is a hammer, but if this is formed at the when there's a downtrend, then this is called a hammer. If there is an uptrend and this kind of a candle is formed, it is called a hanging man, right? Now that's it. I mean, there is nothing more to this. This is one type of a candle that you just need to know where it is being formed, and after that, I mean, we can get back to the chart and we'll see on the live chart, and you'll understand it there. Then the second type of a candle is a shooting star. Okay, it is called as a shooting star. Shooting star, or a, this is the same thing. I mean, where it is formed, it has a different name. Inverted hammer, either a shooting star or a inverted hammer. So how does that look now? Well, that looks something like yeah, I'll have to draw it here. Yeah, maybe. Oh, come on. Something like this. this line being drawn, a straight line. I want a straight line. I mean, the hammer had a straight line. Why doesn't a shooting star have a straight line? It'll be unfair. Yeah, this is done. This is a shooting star, uh, and the same goes here too. Okay, now again, the color of this does not matter. I'm just doing this green, and I'll be doing this red. Okay, fair enough. Now, if it is formed at the top, like let's say the market is rising, okay, we should do rising with green, I suppose. The market is rising and this type of a candle is formed, then the chances of a reversal are high, and if this happens, it is called as a shooting star. And on the same side, if the market has been falling, like falling market, bear market, and you see something of this sort, then this could turn out to be a reversal again, and it could go up. And like I said, the color doesn't matter. This can be red, this can be red, this can be green, it can be anything, absolutely. The placement of the candle is what matters, where the candle is being placed. If you see such kind of a candle at a I mean, where there is nothing happening, I mean, it's a sideways market like this, and you see this type of a candle, it's not going to signify anything, right? So it's all based on the trend of the market, where you see this candle appear on the chart. That is what matters the most. Okay, so this was the second type. Hammer was the first, shooting star and inverted hammer was the second one. Okay, let's move on to the third one. I mean, there are many types and I'm not going to cover all of them because personally I don't even know all of them. There are just a few that you need to know, and if you know them well, you can spot them well, you're going to be better at trading. Okay, then is doji. Okay, and again, there are pretty much different types of dojis, like let me see, there is this doji, then there is a gravestone doji, then there is a where is it, yeah, a come on dragonfly doji. I mean, yeah, mostly that's it. What a doji is, it's a long candle. There is a long-legged doji too, something like that, but I'm not considering it right now. And this is a doji. What is a gravestone doji? Well, this and this is a gravestone doji, and a dragonfly doji, simple, right, is this. Oh, this was big, this is not that big, I mean, I don't know what I did. Yeah, this is a dragonfly doji, simple. Now what a doji is, I mean, it's not something, but let me just tell you that it is a complete indecisive candle. इससे कोई पता नहीं लगा सकता कि मार्केट में क्या होने वाला है, but if the market is coming from bottom to top, and if this is formed, it means that the buyers and sellers are in a tug of war. Okay, so after this, the next candle that is formed, that is important. If the next candle gives a closing above the high, like something like this, a closing above the high with green color, okay, with a green candle, a bullish candle is formed somewhere after the doji, then it can mean that the market will continue to rise. If it is a red candle, but no, this can't be a red candle, let's say okay, I need to delete all of it, I suppose, for now. Yes, I guess so. Yeah, if it is a, this is a doji, and the next candle that is formed, the next candle gives a closing below, all right, below, so something like this, something of this sort is formed here, all right, and it is red in color. Where is the paint? Yeah, this is red in color. Okay, it can be any type of a candle, all right, it can be any type of a candle, but the closing has to be below, either below or either up. So that signifies that either this trend is going to continue up or it's going to go down. All right, it's like the doji does not tell you anything itself, but the candle after that, जो candle doji के बाद बनती है, वो आपको बताती है कि मार्केट का डायरेक्शन क्या हो सकता है. Okay, and then gravestone doji, I mean this can be seen as same. I mean, after this what happens, and after the dragonfly doji, mostly this type of a candle is seen after a bull bull run. This type of a candle is formed. I mean, you can clearly see it, right? The market opened exactly here, went up till here, made a high, but couldn't keep up. All right, the price couldn't stay here, so the sellers got it down. Sellers made it down, and this case open and close. Open, OPE, and I need to write everything, I suppose. Open, oh come on, the open, the close, and the low were all the same. I mean, literally the same. If that is the case, then there is a high chance of the market to take a turn and after this fall down. Okay, the bears are more active here because the sellers could not take the price even up here or here or here. They did try to get it up till here, but the buyers were so heavy that day that they got the price down again. And same goes with the dragonfly doji. Let's say the market is coming from a bear market, it's a bear market, it's coming down, and something of this sort is formed, then you can expect the market to go up. Okay, fair enough. Is this type understood? I hope it is, because this is not much complicated. I mean, the candlestick patterns are not complicated. What complicated is, I'll be telling you that later on. But for now, just to know all of this, and if you're seriously watching or seriously trying to learn, it's better if you take a book or something and make proper notes of this. Okay, the next one is the bullish engulfing. Okay, and the bearish engulfing. Bullish engulfing, bearish engulfing. Now what is this? I'll have to draw something again. Okay, so come on, why is this? Yeah, this is drawn here, this is drawn here, and again a straight line. I hope it is straight somewhat, somehow, somewhere. Please don't mind if my lines aren't straight. I mean, yeah, this is a straight line, this is again a straight, this is not straight. I needed to, my time is being wasted drawing straight lines in paint. Wow, seriously, never mind, I don't care now. This is a straight line, it isn't. This is a straight line, it isn't. I don't care. Okay, so this, and yeah, same as yours, but the difference is that in a bullish engulfing, this is red, this is red, this is green, and this is green. Okay, we start now. This is this is a candle, red candle, and the green candle has completely taken over the red candle. I mean, eaten, you could say. खा लिया इस कैंडल को, इसके बॉडी ने इसके बॉडी को खा लिया, पूरा engulf कर लिया. This is seen mostly after a downtrend. Okay, let's say the market was falling down and something like this happens. You see something like this, you can expect the market to go up, and this is generally seen in a bull run. So the market is coming up, and this is formed. The next step for the market will be something like this. That is it. Bullish engulfing and bearish engulfing is just this, but the placement is more important. Okay, knowing this is fine, it's okay, but if you can spot it, I mean, if you can see it happening on the chart, then only you can make money out of it. if you can see it happening on the chart, I mean, after it's formed, after like 2 3 days after this, something like this is formed, the market starts going up, and you'll be like, oh, ये तो bullish engulfing था, कोई point नहीं है. This is the exact day, like this is the last candle that should be formed, and you should be able to grasp that this is a bullish engulfing, and the market could turn around and go up from here, and same goes in this case too. So till now, if we see, we have covered the hammer, the shooting star, the doji, and the bullish and the bearish engulfing. Okay, fair enough. The Now let's get back to the next type. The next type is a bullish harami, and a bearish harami. Sweet. Now again I need to draw. Sweet, man, I don't like drawing. Rectangle, yeah, rectangle. Okay, this is a rectangle here, this is another rectangle here. No. And again I'm saying this, that you will not find exactly these types of candles ever in the market. I mean, it is not physically possible to spot exactly these types of candles, but with a bit of experience, and with a bit of trading and practice, and your eyes understanding what is what, and if you know what the trend is, you understand what's happening, and you have a bit of a practice, then you'll be able to identify what is this, what is this, what is this type, what is that type. You'll know it yourself when things like this happen. Okay, so yeah, getting back to the bullish harami. Where is green? Bullish harami, I need red. Yeah, bullish harami red here, and bullish harami red here, green here, and green here. Okay, now a bullish harami will mean that after this is mostly formed at a bottom after a bear trend. If you see something like this, then the chances of the market going up is high. And the bearish harami, as the name suggests, if it is a bull run, a trend, uptrend, and you see a bearish harami pattern formed here, the chances of the market falling down are legit. This, and in fact, I have a beautiful example of this right now, right here. Let me just yeah, bank nifty and daily time frame, I suppose. Yes, my friend, daily time frame. Do you see this? Okay, this is not. Yeah, no, where no, this is not. No, I suppose this is different. Oh, come on. Yeah, I don't think this is it. But you see this type of a pattern, right? This is a big green, this is a small red inside. Where do you see this? A big green and a small red inside. After a bull run, it was not like a bull run, but again, uptrend, this is formed right here, and after this you can see what has happened in the next few trading sessions. So yeah, this was the example that I had in front of my in my mind right now, so I just showed you. And don't worry, we'll be seeing all of these, we'll be literally seeing whatever we have seen till now here, this or a hammer or the shooting star, the doji, we'll be seeing all of them on the chart. But for now, just understand these things, just remember the names, just note it down, just make whatever I'm making right now, and keep it safe in your notes, and keep a track of what you're doing. And whenever you see something like this, you should remember what type of a candlestick pattern this is, and what it can do. Okay, what it can, no, can is a wrong word, what it could do. All right, the next is a marubuzu. I still don't know if I'm gonna spell this wrong. Sorry if I'm spelling it wrong. Marubozu, marubuzu candle. Now what it is this is again a complete indecisive candle, like that's it actually. I'm gonna say this is the high and the close, or the high and the open, or this is the high and the sorry, the low and the close, or the open, whatever it is, but it has no wick. Okay, no wick, and that's why it is a fully, again, I mean completely an indecisive candle. Again, you cannot know what is going to happen after this. This can either be red, or it can either be green. Both ways it's fine. But what you can do is, the next candle that is formed after this, the next candle, just like in doji, the same goes with marubozu. If the next candle is green and gives a closing above this, then it's a bullish momentum. If the next candle that is formed is red and gives the closing below this, it's a bearish momentum. So just like doji, even this is a fight between the buyers and the sellers, and both of them have not decided anything. The market has not gone on anyone's side. तो जो next day होगा, उसके basis पे we can understand if the market is going this way or the market is going this way. Fair enough. Now, as we have covered up these candles, there is just one more, but I don't know if I should count it in the candlestick pattern or the chart pattern. So let's just end it up right now over here, and we'll see. I mean, I'll be making maybe a video on the candlestick, the chart patterns later on sometime, and we'll understand. Now, coming back to our topic, which time frame should we use for this? Should we use a daily time frame, a 15 minutes time frame, a 5 minutes time frame, whatever you want? I mean, literally want to say whatever you want you could use, but to identify on a strong candlestick pattern, the bigger the time frame, the better, or the easier, I wouldn't say, but the better the outcome of the trade would be. Okay, like if you see something on a 1 minute time frame, like a hammer or something, like this is a hammer right here, but it was after a big bull run. You saw a hammer right here. I mean, look at this. This is you could say a doji or a inside candle, and yeah, you can see what happened here. But in the smaller time frames, you will see a lot of things like these, right? Like you can see a hammer here, a doji here, a hammer here, a gravestone doji here. So it's not like it's not gonna be helpful. But the bigger time frame you use, the outcome of the trade, the outcome of your decision making or whatever you have seen is higher. The probability of that candlestick pattern is higher. Working, the candlestick pattern working is higher. Okay, so mostly I would suggest you don't go below, let's say, 5 minutes. The max to max you can use it in 5 minutes, and anything, a day is fine, a week is fine, a month is fine. But the best I've seen is it works beautifully on daily time frames. Okay, so that's said and done. Now we can get back to finding the candlestick patterns on a real chart. All right, now the latest one I showed you already on Bank Nifty. Now in the week, if we see sorry, the monthly time frame, if you want to see, yeah, we come back here, a big red candle, and after that it is formed a smaller green candle. This is a bullish harami. It is again formed at the bottom, so there is a chance. I'm again saying there is, I'm not saying it is 100% sure. Okay, the month is not over yet, but this isn't a bullish harami. No, this isn't a bullish harami. Sorry, my bad. No, this isn't. Okay, never mind, I'm sorry about that. We should jump back to Nifty, I suppose, because yeah, it's, I mean, you can see it in anything, actually going to say. Okay, now we come here. What do you see here? What is this? This is a hammer, but it is not called the hammer. It is called as the hanging man, right? I mean, where do I have text? I do have text. Yeah, hanging man. The hanging man is this. Okay, this is your hanging man formed right here, and like I said, the color does not matter. You see the market came from an uptrend, this candle was formed, after that it's falling. Okay, now you could again say that okay, even this is a hammer, so what, tomorrow the market might go up. It could, I'm not even kidding, it could, but this is not that such of a downtrend. We'll see hammers being made in the downtrend too. Okay, now this is another example of a doji. You remember doji, indecisive candles? Now someone would say that no, you had said that the open, I mean, there should be no open and close, it should be the same. I kind of agree, but again, just like I said, with practice you will understand what to use where and what could be said to be a doji, what could be said to be a hammer or something like that. Okay, so you saw already two types, two types of this, two types of candlesticks here. Again, we'll try to find some other ones. This is a doji. See, after a big, this was a total downtrend. You can see that. Then this, a doji was formed. A doji in itself was indecisive. If after this a red candle was formed right here, a red candle was formed, okay, red, it would be a downtrend again, but it wasn't a red candle, it was a green candle, and it gave a closing above this, and then you see the bull run. All right, it is most important to find such candlestick patterns in a trend, in a sideways market, like see here, in a sideways, this is a totally sideways market, right? This is a sideways market. In this, finding any type of a candlestick is not going to be worth it. In this, your chart pattern comes in, like this is resistance, this is the support, resistance is broken here, and after that you see for yourself what happened, but that's something we'll come across later on. For now we are focusing on candlestick patterns. Again, if you see here, now someone would say that this was a doji, and yeah, this was a doji, and then it was a red candle, so the market should have fallen down, but it didn't. So yes, this time it didn't work. I mean, it's simple, right? It's not going to work every time. There are going to be some cases in which it does not work, so you need to have some kind of your risk management in place. You cannot just trade on the basis of candlestick patterns only. They are not 100% sure. All right, never they're 100% sure. What is this? Yeah, this is such a bearish candle. Do you see this? This right here, this would be called as a bearish engulfing. This I mean, oh come on, where is it called? Yeah, this could be called as a bearish engulfing, a green candle followed by a big red candle, and after this the market went down, right? So come on, yeah, this was a bearish engulfing, the example of a bearish engulfing. Now if you want to see somewhere a bullish engulfing, which I am unable to find, no, I can't find a bullish engulfing. Yeah, you could say this. Yeah, this is your how can I forget what this, shooting star. No, this is, yeah, this is your inverted hammer, my bad, sorry. This right here is your inverted hammer after a downtrend. You saw this happening here. After this the price closed above and the market went up. All right, fair enough. That's what your inverted hammer is. So what else, how much I can, and finding these after it has happened is very easy. Okay, I mean, anyone, even a 10-year-old kid can show you what is happening, where is happening, how is happening. After it is formed, getting to see is very easy. All right, but while it is being formed, okay, like literally here, or like I showed you in bank nifty, let me just open it here. Yeah, bank nifty daily time frame. Yeah, this, if you can spot it right here, okay, this day itself, oh come on, this day itself, if you can spot and you can know what this is, then you can decide what to do later on. Okay, now this is a bearish harami. All right, if you know what this does, It's formed after a big uptrend. It's a bearish arame, so the market may go down. You can buy, I mean you can sell here, and you can put your stop loss here. It's that simple. And maybe your stop loss gets hit, maybe. I mean, if you see till now how much, if someone took a put option, all right, let's say someone took a put option right here, and where is it? Yeah, someone took a put option here. From here to here, the person has already made over 1.5%, which is not a lot. I'm again saying this is not 1.5%, and put option is literally not a lot. 500 points. That's it. That too in Bank Nifty. But you got this trade, right? You saw it happen. Okay, you literally saw it while it was happening, and you got this. So this you need to practice. You need to read charts. You literally need to go through charts and charts every day. Okay, now this is a good thing. This is a nice example. This is a hammer, but this is a indecisive. I mean, there is no point of this hammer. This hammer is not telling us anything. The market did go up after this, but still this is not the hammer we are looking for. Okay, we should be looking for a hammer either here. This is not a hammer though, this is a hanging man, but just for example we should be looking for a hammer here. Yeah, this is a hammer here. This was your hammer, right? So what else do we have here? I mean, you can find it, you can see it, but only after you practice. Okay. One more disclaimer, like this is important. बस कोई दो चार वीडियोस यूट्यूब पे देख के या कहीं पे कुछ सुन के आप ट्रेडर नहीं बनने वाले हो. You need to put in efforts, you need to give in time, you need to study charts, you need to practice making support levels, resistance levels, trend lines, everything. And only after that, I mean, it's not a guarantee that you'll make money. Most of the times, if you're watching this video, you're mostly a beginner, and you will be losing your money for sure. Like, there is nothing, I mean, I'm not being sweet to you and saying that the market will give you money or something like that, but no, in the starting you're going to lose your money. So please keep this one thing in check, and that is, please, okay, this is the one thing that you need to keep in check. If you have your risk management intact, if you know how much money you're okay with losing, if that's the case, you can be successful in the stock market over the long run, not instantly, not in one day. Okay, I'm saying over the long run. Please don't think the market will give you money in one day. No, that's not what market does. Market will give you money only if you do the right things. If you just trade on tips, and if you just trade on मुझे लगता है ये होगा, no, that's not gonna happen, and you'll end up losing all of your money, all of your capital, and you'll be left with nothing at all. So please, if you're getting into the market, know your risks, know your rewards. Please place a stop loss. I mean, we'll come to that later on. If this video gets views or likes or whatever it is, if that happens, then I'll be making another video maybe. But till then, please take care. Don't be in a rush, don't be in a hurry. Take a trade, don't be greedy, and don't think that if you don't get a trade right now, you'll never get a trade. It's not gonna happen. The market's always gonna be here, but if you're not patient, your money won't be here, and that's a guarantee. Okay, so if you have any questions, if you have any doubts, you can let me know down in the comment section, and I'll make sure that I respond to them soon. I hope you learned something, and I hope this video helped you and will help you with your journey in the stock market, and I hope that journey is a successful one. Alright, as always, trade responsibly and efficiently. Thank you for watching.